Hello and welcome back to the channel. My name is Adam Fyfe, your Calgary Realtor. The Calgary Real Estate Board has recently released its Q1 report for 2023, and what I'm going to do is give you my honest thoughts while going through the report. It is very important for you to know the data. These reports are old. We always look at previous data to try and put together an idea of what could happen over the next 3, 6, 9 months as you prepare to make a move here to Calgary. I'm really excited to dive into these numbers. It is a very wild market out there right now. I feel bad for a lot of buyers, especially people who come here with the expectation that Calgary is affordable. Calgary is very quickly becoming unaffordable for a lot of the average income earners. So what I'm going to do is break this down as best as possible, give you the realities of the situation, and hopefully help you make a decision. So what I'm going to do is I'm going to just kind of dive right into it. Now I'm going to move this camera around a little bit just to make sure that we're getting all of the content and not really cutting things off. Now, I really do want to call out CREB, the Calgary Real Estate Board, because they make some amazing reports. Huge shout out to them because these reports are very, very good. Now, if we go here to the table of contents, you can see that there's a couple things here. I'm going to touch on Calgary. I will look at the surrounding areas, but I'm not going to touch on them. I will put them as chapters in the channel, but I'm not going to explain them. So all I'm going to do is I'm going to pause on them for 5 seconds each. You get to pause the video and read the data. If you have specific questions about the surrounding area towns, you can reach out to me and ask, but I'm not going to utilize this video to explain them. This video is concentrated on Calgary. Now, the City of Calgary update. There is a lot of information here, and it looks like it's a little bit of a small lettering. So I'm going to try and zoom in on a couple different areas here. It doesn't look like I do that. So I'm going to just touch on a few different things. Again, I'm not going to read this verbatim, but I'm going to try to recap it for the best, as best as possible. So on the left-hand side, you can see sales, new listings, inventory, benchmark price, sales to new listing ratio, and days on market. Again, this is Q1. This is not the most recent data. This is just what happened over the first 3 months of the year. And we have to remember, January is historically slow. February is historically slow, where March really does depend on the weather. If March is very cold, it could be slow. If March is very hot, it could be very busy. So we do need to have some seasonal adjustments in this equation as well. Now, the sales, looking at this, were down. 2022 was an absolute wild roller coaster in January, February of last year. We had a pretty good January, February this year, but it was nowhere in comparison to what we experienced last year. So it makes sense to me why the sales were down. New listings are down. Again, same idea, a little bit of a crazy year last year. Inventory's down as well. I would have to imagine because the sales outpaced the listings this year. Not by much. I mean, you can see that there was only 5,300 sales and there are 57,500 listings, but the inventory was quite low. And the reason is because there were so many people coming to Calgary, buying up a real estate. That inventory or that new listings looks good, but historically that is quite low. The benchmark price is $531,000. It's gone up 2.4% year over year. Sales to new listing ratio is down from 74%. Again, 2022 was historically busy. 2023, we're historically hitting new price points. You can see that the days on market is actually up compared to last year, where it's starting to switch this year. I would strongly recommend watching my monthly recaps because I do go into these numbers in a lot more detail. Now, again, I'm only going to touch on the highlighted points. If you want to read this, pause the video. Despite the decline, sales activity has remained well above pre-pandemic levels, thanks to recent gains in migration coupled with a stronger employment market. I'm very excited to talk about the population growth here in Calgary because that has been the main driver of why real estate has gone so expensive lately. Most notable challenge in the market has been relative to supply levels. There is just not enough listings. There is simply not enough new construction and not enough new listings come on the market for the amount of people that are moving here. So it is very, very, very important that you set up a plan. The pace of declines in new listings has exceeded expectations. They had an expectation that people were going to sell their home, where the higher interest rates have somewhat turned people off, especially for the move up buyer. It does talk about that in this report. With the sales to new listing ratio of 71% and a months of supply under 2 months in the first quarter, conditions continue to favor the seller. Now, under 2 months means that if no new product came on the market with the amount of buyers that are currently in the market, it would only take 2 months to sell that product, which is a seller's market. Anywhere between 3 to 4 months is balanced condition. Above 4 months, you can consider to be a buyer's market, favoring the buyer. So right now, a lot of the negotiation power is in the all the negotiation power is in the seller's hands. The quarterly benchmark price rose 2% in the fourth quarter to 531,000, but remained below Q2 highs. That has recently shifted or shifting. This quarter is going to actually have more year-over-year gains, and I'm excited to talk about the Q2 stuff once it comes out. Being in the market right now is pretty intense, and it is definitely important for you to set up a plan well in advance. Price growth to date has been stronger than expected. It has gone through the roof. Again, please watch my monthly recap videos where I talk about each individual property type about these exact things. So if we just scroll down here. Now, key economic indicators. And we're going to talk about a couple different things here. And you can see my camera is actually covering a few different areas. Now, while inflation has shown signs of easing, further reductions are still required to achieve the target rate. I would imagine that the interest rates are going to stay relatively the same and maybe even inch up. Now, I am not a financial advisor. I am not giving you financial advice. This is just my opinion. It is very important that you talk to a mortgage broker or your bank about what your plan is, because the prices are going up, and I see that Toronto and Vancouver are starting to tick back up into a direction. So are they done with the increases yet? I don't know. It's very hard to say. A short, mild national recession is still expected over the next several quarters as higher prices weigh on consumer spending and investment activity. It's quite wild, the current situation that we're in. I mean, the government of Canada, actually, I think it was 500 billion. It was something absolutely absurd that they just printed new cash, and it went into our real estate market in 2000 and 2021 when things were going a little bit nutty with the pandemic. The government of Alberta, they printed a lot of money to try and offset a lot of the recessions that we were to achieve from the pandemic. Now we're kind of seeing it now, where they've printed a lot of money and we're having some negative effects from that. Housing prices have gone through the roof. Affordability is not so affordable anymore. And I could see some recessions coming down the pipeline. I'm not sure. I'm not an economist. I don't really know what's going to happen. I can just look at the data and give my opinion on that. And my opinion sometimes changes every single month because new data comes out and shifts my opinion. So it is very important to watch these things continuously as you are getting to know the market and making decisions on your personal behaviors, right? We want to really make sure that you are making decisions based off of your personal situation and not always what's going on with the economic activity, if that makes sense. A stronger energy sector and migration growth will help offset some of the effects. Now, this is where I am very curious to see how our provincial election, we have the NDP in one corner and we have the Conservatives in the other corner. Everyone's going to have different opinions on who they vote for and why. So it will be very, very interesting to see the different platforms when they talk about energy. Alberta seems to be, there's a lot of talk about Alberta trying to phase away from energy. I don't see it. I don't see it happening anytime soon in our lifetime. Alberta is such an energy dependent province. We need to invest more into energy, cleaner, ethical oil production, right? We need to figure out ways to actually extract this properly and manage our risks accordingly. So it will be very interesting to see what happens with this provincial election, because that is one of the topics that will either be good or bad for our province moving forward, depending on who gets elected. Now, there's a couple different graphs here talking about net population. There's so many people moving here, which has caused our prices to increase at a rapid pace. So with the amount of people that are moving here, and then on the bottom here, you can see housing starts, we're down for detached homes. We're up semis and we're up row and we're up apartments, which is great to see. But we're down in detached homes, which is what most people want to move into. So it is very, very interesting to see how many people are moving from Ontario, how many people are moving from British Columbia, and then how little our housing starts are compared to what they have been in years past. Lots of labor shortages, lots of people hurting for people, like for good workers. Rental markets are pretty crazy. I'm starting to make more videos about the rental market. You can see that the rents have increased 20% year over year. And the vacancy has dropped 5.4%. We have a 2.5 vacancy in Calgary right now, which is insane. It's dropped. It was at 7% according to this stat here. And, the investors are doing good. I have a lot of investors reaching out to me wanting to buy real estate. Higher lending rates, higher prices really isn't a good time for investors to invest. There are good opportunities out there, but you've kind of missed the mark. And I tell a lot of people that you kind of missed the mark. It is a very wild time to be in Calgary right now. There is a lot of interesting things happening. Are we in a bubble? Is it going to last forever? It'll be very interesting. The unemployment rate right here is upwards of 7%. The sheer amount of people that are moving to Alberta is not sustainable for the amount of jobs we currently have. It's plain and simple. There's really no way around that. There are so many people moving here and there are just not enough jobs. Yes, there are online jobs and people working for companies in the United States or anywhere else in the world, but there is still so many people moving here that want the 9-to-5 work. I know personal friends that are struggling to find work and they're very highly educated. So it's a very interesting time. The unemployment rate, I feel, is going to be very important to watch because that is something that might sway politicians to make certain decisions. All right, the detached homes. So I'm just going to actually shrink this up a little bit here. So the detached home market is obviously the most sought after market. We watch it the closest. Now, the biggest challenge in the detached market has been the availability and supply in lower price ranges. The affordable product in Calgary is not so affordable anymore. I'm gonna call it out. We're not so affordable. If you look at the average income, and you look at the prices, and then you look at lending rates, it's not so much affordable anymore. Prices have gone through the roof. Prices are now for the detached market is $636,000, where a few years ago it was $550,000. That is an insane increase from 2 to 3 years. That is an absolutely crazy increase. The first quarter sales, the detached sectors only accounted for 47% of all activities, which is a little bit low. The product has increased so much in price that a lot of people are now leaning towards townhouses and semis just to get into the market. When we look at the bottom here, sales are down, new listings are down, inventory is down, months of supply is up, sales to new listings ratio down, and days on market is down. Again, this is Q1 of 2023. You need to watch my monthly market recaps to get a better understanding of what is going on actively in this market. This is only Q1 2023 to Q1 2022. So if we scroll down here, semi-detached are gaining a lot of popularity right now. They are pretty wild to watch. They have a very high and highs, lows. They have a lot of ultra luxury products for like 1.1, 1.2 in Calgary, which is pretty crazy to say for a semi-detached home. So those have a very large swing because they are a very unique niche product. Not everyone wants to spend over $1 million on a semi-detached home when you can spend $700,000 on a detached in a suburb and get a pretty decent product. So they do have a lot of fluctuations. It's pretty crazy to watch my monthly reports. Now, again, going back to it, the benchmark price is up 3.3% of last year. And then if you look at the bottom row here, there's a bunch of different stats. Semis are very interesting and it is very exciting to watch. So again, watch the monthly reports. I can't stress that enough. Townhouses have been on fire. This is probably the busiest sector in Calgary as affordable product has just taken off. You can see that like other property types, the supply levels have remained low compared to sales, keeping conditions exceptionally tight. The price point of townhouses have absolutely skyrocketed, and I'll overlay a snapshot of the benchmark price compared to last year, and you can just see how much it's actually increased. On the right hand side, I should have brought this up before, but on the right hand side you can see a map here. All of the dark blue is 6%, where west is only 4 to 5%. I mean, 6% year over year is a pretty drastic increase for real estate. We have seen some pretty wild increases in price point as more people move to Calgary, and the demand is staying strong, and we're just not having enough listings come on the market to offset balance conditions. So how long is this going to last? I'm not sure. We'll have to see if people slow down or leave. If there's not enough jobs and it's not affordable anymore, people are just not going to stay in Calgary. So the apartments have also been a very, very, very hot market. You can see this whole map on the right hand side is all dark blue. Every single quadrant has increased by over 6%. Inventory levels, which remain at levels not seen since 2014, and current benchmark prices still remain below the highs reported in 2014. We are very close to achieving 2014 prices. Condos in Calgary have been absolutely on fire lately. There is a lot of good opportunities out there for affordable price points, but you are getting smaller units and less desirable neighborhoods for more expensive. So again, so important to make sure that you create a plan ahead of time and make sure that you have a full understanding of the quadrant that you're looking in, at the community that you're looking in, and the price point. Just because you're looking in the $500,000 price point, you can actually go into townhouses. You can go into semi-detached. You can go into detached if you really want to. you're not going to be able to go all of that in one community. But if you look in different areas of Calgary, you can get a product that's desirable for you. You just need to make sure that you're doing it in advance. You're setting up a plan. How fast are things selling? What are they selling for? What are the terms in the contract? You know, how important is the location to you? How important is the product to you? There is so much to consider that you need to do well in advance. So moving along, so here's the surrounding areas in a nutshell. Again, give this a pause. You can see the little circles here are, 4 to 5%, where High River has had the biggest increase of over 6%. Again, I'm not going to touch on this a whole lot, but if you are curious about what's going on in these individual areas, please make sure to pause the video and look and be educated, right? Because if Calgary's getting more and more expensive, you can go outwards of Strathmore. You can go outwards of Strathmore. You can go to Cochrane. You can go to Okotoks. Whatever, right? Is the location more important to you, or is the product more important to you? That's a very important question you need to ask. So let's see if I can do this with this larger camera. So Airdrie, please go ahead and pause the video and see what the Airdrie real estate board has to say about this. You can see the benchmark price is $488,000. Now I'm pretty sure that's total residential. I could be wrong. The benchmark price, yeah, so I'm not 100%. So Cochrane is $494,000 for their benchmark price. Again, give this video a pause. Not Cochrane, it's Okotoks. It's Okotoks, not Cochrane. $551,000. Cochrane is $494,000. Sorry, I'm scrolling too fast here for my own good. Okotoks, I'm so sorry. Go back and forth here. Chestermere is $631,000. Chestermere has a really nice lake there. Lots of water features in Chestermere. You can see that their price point's a little bit higher at $631,000. High River, you drop all the way down to $419,000 for benchmark price. A little bit outside of Calgary, but again, as Calgary is expanding, they're getting somewhat closer and closer together. I'm getting this confused with Okotoks. I'm really falling apart here. I'm so sorry. Strathmore, $382,000. This is quite east of Calgary. I would have to imagine it's about 20-25 minutes away. You can see the price points are quite low. So I mean, if the product is more important to you and you don't really care about the commute that much, $382,000 for a product here. Rural Rockyview, this is you got Rockyview and Foothills. Rockyview, I would argue, is a little bit more expensive, $731,000. Really nice areas, really nice acreages, beautiful landscapes. Canmore, $867,000. If you want to be in the mountains, this is what you're looking at paying. And I think that's it. So a little bit of hiccups there. I'm so sorry. Cut me some slack. I'm trying to do this in one take. So this is my Q1 2023 report. If you have any questions about any of these individual surrounding areas, any of these individual slides, please make sure to reach out to me, ask me questions, let me know what you're thinking, set up a plan well in advance. Don't just hop into the market last minute. Don't be fooled by a couple different data points. Really make sure that you're diving into the numbers, get a full understanding of what it is that you need to expect and how the process actually works. So thank you very much. I really appreciate your time. If you want more information, go ahead and reach out. Make sure to subscribe, and we'll see you on the next one. Peace.